Good morning, you magnificent melon heads. Happy Friday, everybody. Today is January 27th, 2023. We got a lot of stuff happening this morning. We got some economic data. The PCE came out, or personal consumption expenditures, which is the Federal Reserve's favorite measure of inflation. Why? Because it's usually lower and it makes them look better, if I had to guess. We also got a lot of earnings data coming out today. We got more stories about layoffs. But look, before we get into that, I have to mention something. When this stream is over, I want you guys to go down below to the link in the description. This is not something I do often. There is a link to a video I put out last night, and this video is something you do not want to miss. This should be a massive story, and the mainstream press is not covering it, and I mean not one bit. The story of the strong labor market that we have been spoon-fed for the last year as an excuse for making us all broke with these rate hikes and with the crashing of the economy. It is all fake, and these are government's own numbers that shows this data is all fake. Huge story, link down in the description. When the stream is over, I want you guys to check that out. By the way, shout out to the great Gregory Manarino and the cure of fires, Johnny Bravo. Thank you guys for helping me spread the word about that story. Both of them made mentions of that story yesterday on their channels. Those are both awesome channels. I highly recommend you check out both. But now it is time to shrink my big melon of a head. Let's see what's going on in markets this morning. Right now, the S&P pretty much flat, down 8 points, about 0.2%. Not a whole lot going on in the S&P. The Dow's actually up by 3 points. All right, little positivity. I got the bear in the thumbnail today because markets were down. Kind of not making up its mind right now. We got the NASDAQ is up 22 or 0.2%. So stocks, really nothing going on right now. Stocks are just kind of sitting here sideways. It's kind of like the calm before, I don't know, are we going to rip higher like we've been doing all week? Are we going to sell off into the close? It's been a pretty good week for stocks. Something tells me the last hour of trading is going to see some fireworks one way or another today. So don't forget to join me for my afternoon live stream at 3:15 p.m. Eastern time today. I do that every week. That's a longer form live stream versus these shorter forms that we do here every morning. Looking at the bond market, we've got yields are up across the board right now. Although the long end of the curve is up more than the short end. We got the 10-year treasuries at 3.54, up 5.5 basis points. So we've got a little bit of a lessening of the inversion in the yield curve. That's a little bit of, I don't want to say risk off, but a reduction of the risk in the bond market. That's still, the bonds are deeply, deeply inverted in the yield curve. Over in commodities right now, we've got gold is down about $5 today, or 0.28% at $19.24. Silver back below $24 at $23.68, down 35 cents right now, or about 1.5%. WTI crude is up about 90 cents right now, or 1.2%, sitting around $82. We got earnings from Chevron today. The Chevron earnings are kind of disappointed. They were not as awesome as the market were expected. They were still record earnings from Chevron, so you can bank on seeing some ridiculous nonsense from the greenies on Twitter and some speeches about how greedy oil companies are killing us all and all that fun stuff. Those are always entertaining. But Chevron did announce a massive $75 billion buyback, and they're increasing their dividend. Now, that was significant because Chevron, they're deploying capital to reward shareholders, which is great as a shareholder, but that also means they're not investing as much money in future production. So they're sending a message to policymakers. If you guys are going to be a-holes to our business model and you're going to turn us into these pariahs of society, don't expect us to invest in any energy infrastructure that might improve your poll numbers. So Chevron is taking all the money that they're making right now and they're returning it to shareholders because there is no incentive to invest in further oil production. So buybacks and dividends, that's where the cash is going, not CapEx. That means reduction in oil supplies a few years down the line because you need constant capital expenditure in the oil industry to get increased flow in the future. It doesn't just come online like that. It takes time. Looking at the U.S. dollar right now, we have got the Dixie is at 102.12, up about 28 basis points this morning. So the dollar is looking a little stronger. By the way, I forgot to mention natural gas. Oh, natural gas is down again today. It's only a penny, or about 0.32%, but still natural gas continuing its slide. Just absolutely terrible. All right, now we're looking at right now the personal consumption expenditures, the PCE index, the Fed's favorite measure of inflation. It came out today, and according to them, prices in the United States increased by 5% year over year in December, which is down from the 5.5% in November. All right, so let me just say here, personal consumption expenditures. These numbers, I think, are doo-doo, to put it mildly. All right, I think the nominal values of the numbers here are way off base, nowhere near accurate. Inflation is much, much higher than 5%. That being said, I think the trend here is accurate. The trend of inflation falling rapidly. Now, that's not to say prices have stopped going up. Prices are still going up for a lot of things. They're coming down for other things, like cars prices are coming down. But I think prices are still going up for things like food, for things like energy. Some of these guys in California I'm talking to about their energy bills. My God, what they're doing out there. But the prices are rising slower. So inflation is coming down. So I think the trend here is accurate, even if the nominal value of 5% is probably not accurate. Moving on a little bit here, we got the personal spending. This was also included in the PCE. This was important. Personal spending in the U.S. dropped by 0.2% month over month in December. December is a month when people usually spend a lot more in personal consumption. You're buying presents for everybody. Not this year, folks. It dropped by 0.2%, worse than the market had forecast of a 0.1% fall. Now, take a look at these numbers here. All right, we've got 2 consecutive months now of drops, we'll say 2 consecutive months of drops in consumer spending in the U.S. And even in November, we had technically a 0.8% increase, but that's not very much. Now, we got GDP numbers yesterday that told us consumer spending was up 2.1% in the fourth quarter. Well, there's just another case of the government's numbers are they accurate? Are they inaccurate? Are they outright lies? You guys tell me. It's hard to go by because yesterday they said personal consumption in the fourth quarter was up 2.1%, and that's why we had all this GDP growth. But according to the PCE numbers, well, personal consumption was really only up a fraction of 1% in the fourth quarter, not even 1%. All right. And by the way, the data supports this. This is America's credit card bill here, consumer credit cards and other revolving plans. This is America's bill, $941 billion right now. It's approaching $1 trillion. This is one of the more concerning charts that's out there about the health of the consumer. But I want to zoom in here. You can see this trend. This is pretty much the second half of 2022. But look at the end of November here. This trend definitely flattened out. Now, we did have a little uptick at the end here, but the growth in consumer debt definitely slowed down in December. So that supports these charts in personal consumption here that shows Americans have slowed their consumer spending. That is bad news because consumer spending drives America's GDP. All right, so this data, again, you have to take all these data points and look at the trends and look at the curves and kind of put together your own picture of the economy. You can't just look at yesterday's GDP number and say the economy is strong as heck, Brandon. Oh, look at all the jobs I created. Whoops, the jobs they created, those were fake too. Oh, sorry. This is the report I was talking about in that video yesterday in the jobs. Turns out in the second quarter of 2022 when they told us, oh yeah, we created 1,120,000 jobs. Sorry, we actually lost 287,000. Whoops. Slight rounding error there, folks. We're only off by 1.4 million jobs. Moving on, nothing to see here. All right, I want to warn you guys a little bit here. This is the CNN Fear Greed Index. And right now, this thing is flashing 69. The market is being driven by greed. Now, this is important because this is determined by a lot of measures, options pricing and things, but this measures the sentiment of traders. And right now, traders are more bullish than they have been. Really, it's a tie for the highest sentiment has been all year, all through 2022, which means the market is ripe for a reversal. All right, we are way, way into greed territory as high as we've been all year. Keep an eye on that one. This is saying the market could turn on a dime any day now. Maybe it happens today. We'll see. All right, I promised you guys stories about layoffs in the title, and here it is. Hasbro warns of weak holiday quarter, which we just saw with that consumer spending numbers, and they're cutting 15% of their workforce. Not a huge number. We're looking at about 1,000 employees But hey, there's another 1,000 layoffs, folks, every day. Another story about more layoffs. Now it's Hasbro. By the way, Hasbro stock getting absolutely crushed right now, down 4.2% this morning at $60, down $2.88. That's not the only one today. Check this one out. Goodyear Tire and Rubber Company laying off 500 salaried employees globally. Now, this is globally. They may not all be in the States, all right? So this doesn't mean a big spike in U.S. unemployment. It's only 500 people. There goes my timer warning. But here's the thing. This is Goodyear, right? This isn't a bank. This isn't a trading desk. This isn't a big tech firm. We're talking about Hasbro, toys, and Goodyear tires. This isn't just tech and banking layoffs anymore. The layoffs are now spreading to some everyday consumer products. This is another bad sign for the market. Oh, and by the way, folks, Intel, horrible, terrible, no good, absolutely garbage quarter that they just reported. We're looking at things like inventory gluts, factory space going unused. Remember the story about the chip shortage and how they were ramping up production and trying everything they could to get the chips done? Not anymore. That's over. The chip shortage, I look at this story about Intel's earnings. Nope, the chip shortage is over, folks. There is no longer a shortage of chips, not according to Intel's numbers. And when I see things like inventory glut and underused factories, that's telling me layoffs are coming in the chip space. Now, that may not affect the U.S. too much. Most of the chips are manufactured overseas. That will change in future years to come, but for right now, it's probably not going to affect the U.S. job market too much, but another sign of the economy not doing so hot, and Intel stock down, 10% this morning. Ouch. Ouch, Intel. That one is getting just absolutely crushed. All right, guys, we are going to cut it off there. I've already been going too long right now. We got plenty more to talk about this afternoon with my live stream at 3:15 p.m., so I hope you'll join me for that one. Don't forget, everybody, click that link in the description down below. You do not want to miss that story about the lie of the strong labor market. It is huge. I want you to spread that one far and wide. Tell everybody. Share it with everybody. I don't always ask for this, but this time I am. This story needs to get told, and the press is ignoring it right now, and they're getting away with it. Hold their feet to the fire. Demand coverage. Thank you guys for watching. Thank you to my Patreon supporters. You guys are awesome. Hi, Mom. Hi, Dad. I love you guys. And until next time, live small and dream big.